Hey everybody, Smart Silver Stacker here. Hope you're all doing well. No, there's a lot going on in markets and in news lately, folks. Seems like every time you look at the headlines, there's some new crisis, some central bank intervention, some escalation in these ongoing conflicts around the world. But today, let's get started with what happened in markets on Friday. The markets were set to sell off in a very big way around the open. I mean, everything was in the red, everything overnight had sold off, and then right around the time that markets opened, this guy, the Fed Whisperer, Nick Timiraos, he's a reporter at the Wall Street Journal, and he's got this track record of accurately forecasting what the Fed's going to do. And to me, it seems very likely that he's receiving leaks from the Fed, some information from them, and that they're using him as a tool to jawbone the markets. But he put out this piece on Friday, right around market open, in which he forecasts that the Fed would be continuing with their rate hikes in November. They'd be doing a 75 basis point hike. But then in December, he suggested that the Fed may be considering slowing down the pace of their rate hikes and that they might do a 50 basis point hike in December. And the idea here is that this is potentially the beginning of the Fed pivot. And this was all that markets needed to hear. As soon as this came out, markets were all in the green. All the major stock indexes turned green. Even gold and silver were catching a bid. And the markets were just jubilant at this news of a slowdown in rate hikes by the Fed. And, this is something that we know is eventually coming. Let's face it, there's no way that the Fed is going to get inflation under control with these rate hikes. The only thing that they're doing is they're threatening to collapse the economy. And before that happens, they will almost certainly reverse, reinflate, ease, kick the can down the road, pick your analogy, but they're going to be printing more fiat currency. And this is something I've been calling for on this channel, and plenty of people in the alternative finance community have been calling for a while, pointing out how obvious it is that they're going to need to pivot. So we may have just gotten our confirmation from the Fed Whisperer that that is indeed coming here in December. At least markets seemed very convinced by that piece. But, speaking of economic weakness, the real reason that the Fed is going to end up having to pivot is because of this economic weakness, this collapse of the economy, and the political pressure that is going to come as a result of that. Now, the cracks have been starting to show for a while in the financial system, but now we're starting to see layoffs pick up in a very big way. So 2 weeks ago, Peloton announced that they were going to be cutting 12% of their workforce to quote unquote save the company. Last week, Deutsche Bank, they began a round of layoffs. So we're seeing these layoffs across industries. Microsoft cut about 1,000 jobs recently. So the tech industry is not safe in any way from these layoffs. And then this morning, Philips, a Dutch medical equipment maker, that's a big company, if I heard of them, they just announced this morning that they're laying off 4,000 workers, or about 5% of their workforce. And this is a quote from their CEO, Roy Jacobs. He said, "We have now had 5 quarters of declining sales, declining profit, and now in the third quarter, we also have become loss-making. You really need to work your cost base to stay competitive and to support your profit. And I am also looking at simplifying the organization." And, he's not wrong. In a downturn, this is what companies are forced to do to try to downsize and survive. They can't afford these workers. They're not generating a profit any longer, so they got to let them go. And we're going to be seeing much more of this in the near future. And this is going to be one of the really big triggers that forces the Fed to commit to the pivot in earnest. Because when people start losing their jobs, and they're already being faced with record high prices, inflation, reducing real wages in the economy. When people start losing their jobs, the amount of economic pain is going to be tremendous. And that means that the political pressure on the Fed to pivot and return to a policy of easy money is going to be tremendous. But let's talk about silver. So silver on Friday, it did rally along with everything else. It's back up over $19 an ounce now. But again, I want to point out that this move is minuscule in comparison to what is going to happen when the Fed really does pivot. Jawboning the market's a little bit different than actually pivoting. And the real pivot, when it comes, it's not going to be just a slowdown in the rate at which the Fed hikes rates. It's going to be massive cuts to interest rates, and it's going to be a resumption of quantitative easing. It's going to be direct bond market intervention, although they might not call it QE. I can't tell you exactly what form this massive intervention is going to take. Maybe it'll have something to do with the Treasury bond buyback mechanism that Janet Yellen keeps talking about. Maybe the Fed will just go old school and just buy a bunch of bonds and call it quantitative easing 6 or QE infinity or, whatever they want to title it. They love these, monikers for stuff, but, debt monetization by another name is still debt monetization. The point is, a lot of fiat currency is going to be created, tremendous amount of liquidity is going to be injected into the system, and if that's not what they do, the whole thing is just going to implode on itself. That's just the situation that we find ourselves in. And if history is any guide, the Fed will go the route of printing. It's what central banks do best. It's what they do the vast majority of the time when they're faced with this type of crisis. And I think it's a safe bet that that's what they're going to do this time around. But enough about the Fed. What I really want to talk about today is a very specific type of silver, junk silver. Today's video is brought to you by Silver Botanicals, household and personal hygiene products that utilize the power of nano silver. Check them out today. There's a link down in the description. And don't forget to use coupon code STACKER to save 10% off your order. These 90% constitutional silver coins that we all know and love, just like this walking Liberty $50 that I've got in my hand right here, because this stuff is getting very hard to find. If you haven't noticed, the premiums on junk silver have absolutely exploded recently. If you look around at any of the major online bullion dealers, these coins are going for 55 to 65% over the current spot price of silver. Right now at SD Bullion, you can get $1 face value for somewhere just over $22, and that comes out to more than $30 per troy ounce of silver. And it's not just SD Bullion, these are dealers across the board. They're either sold out or they're featuring similar premiums. And I did forecast that we would see a spike up in the premiums on junk silver in a video that I put out back in February of this year. The title was Junk Silver King of the Stack, Why I'm Stacking 90% Silver in 2022. And in that video, I did an unboxing of some junk silver. It was crazy to go back and watch that video now because at the time I paid something like $20.50 per $1 face value of junk silver, and the spot price was around $22.50. So that premium represented about 28% markup over the spot price. And at the time I did that video, that did seem very high, but I knew that because these coins are in such limited supply, they haven't minted them in close to 6 decades now, that the premiums were likely to keep on climbing, and that is exactly what we have seen. And I asked SD Bullion about this recently, and this is the quote that I got from their director of bullion. There is very little inventory across the entire space, with most dealers who have historically participated in the market just giving up and not even trying to source it because it's a waste of time. There's nothing available. Market participants aren't selling back even at very high bids as they want the silver, and no other products are a decent alternative for their holdings. And as we see the economy continue to degenerate here and more investors come to the realization of where we are headed, my forecast today is that premiums on junk silver and also just on most physical bullion products across the board, they're going to rise. Now, Silver Eagles and the US Mint bullion coins, that may be one exception. If they can get their supply chain issues worked out, maybe the premiums on Silver Eagles might come down, but that is a big if. The supply chain problems could also get a lot worse, so who knows? Maybe a 100% markup over spot for Silver Eagles, maybe that's going to sound like the good old days in a couple years' time. And junk silver, I don't know about stacking this stuff at today's premiums. I mean, I do hesitate to pay 60% over spot for any kind of coin. Lately, I've been gravitating more towards just the large bars because that's where the more reasonable pricing is at the moment, but I don't know. I'm pretty glad that I stacked the junk silver that I did when I did. And honestly, if I just take the emotion out of it and just think logically, I tend to think that these coins are still a good buy at today's prices because there's a good chance of them simply becoming unobtainium in the near future. Of course, none of this is financial advice. I'm not a financial advisor. I'm just sharing my thoughts with you. But what do you think? Are you still stacking junk silver at today's prices, or are you moving to the sidelines? Do you think that there's other types of bullion that are a better deal? Do you think these premiums are going to keep going up? Do you think they're going to come down? Leave me a comment down below to know, because I'd love to know what you have to say. Because again, I'm kind of conflicted myself about paying 60% over spot for these coins. But, rationally, I do think those premiums are going to continue to march higher. Okay, and to wrap things up today, I do want to respond to a comment that a viewer recently left on a video. And this video was titled, "Don't stack an ounce of silver until you do this first." And the gist of that video was that before you start stacking physical silver bullion, you should consider your security, where you're going to keep the silver, how you're going to keep it safe. Also, you need to be taking care of your basic needs, food, water, self-defense, beans, bullets, band-aids, that sort of thing. It's probably a good idea to get out of debt, especially consumer debt, before you start stacking silver. And also, I think it's critical that you have an emergency fund in place before you start stacking, so you can be a strong hand, if you get some kind of unexpected expense. And David K left this comment. He said, "Your refreshingly responsible message contrasts with the usual YouTube pundits' admonition to buy, from my sponsor. Emergency cash in an FDIC insured savings account protects principal, pays modest interest to mitigate inflation somewhat, and is available 24/7. Precious metals as emergency funds put folks in the hole right out of the gate due to premiums. Adverse spot price timing to sell under duress is risky. Precious metals are fine for long-term outcomes after debt is retired and emergency funds are in place." So thanks for that comment, David. I do just want to comment on a few points you made. So yeah, it's not always the time to buy. Personally, I prefer to buy on pullbacks when I've got some dry powder. That's just how I do it. I think dollar cost averaging is a good idea. Although overall, I do think it's a generally good time to be buying precious metals because they're still very undervalued considering the nature of the situation we find ourselves in economically. Now, regarding the FDIC insured savings account, one, let's be real, the interest, even with rising rates, it's not really offsetting inflation by very much because inflation is in real terms probably a lot higher than we get reported by the CPI. Yeah, your bank account is available 24/7. Now, that's assuming that there's no, cyber attacks or anything else going on that's going to deny you access to this bank. So while they may be accessible 24/7 now, I don't think we should always count on electronic money and bank accounts to be available 24/7. And, also, if we do see this debt market collapse and liquidity lockup, don't assume that your bank account is going to be available 24/7 because it's not. If the bank runs out of liquidity, they're not going to be able to give you cash or to make good on your deposits there. He did mention the FDIC insurance. Yeah, that's true. The FDIC does insure bank accounts in the US, but listen, the FDIC is really no protection at all, if you ask me. And that's because the idea is that, if the bank should fail, the FDIC will just cut a check, they'll capitalize your account, and, up to, I think, $250,000 nowadays is protected. But here's the thing, the government, they don't have a big fund to recapitalize these banks and to make good on your deposits. So if that happens, if they are forced to pay out to account holders in these banks, all of those payouts, they're going to be financed via the printing press and borrowing. And you might get your money, but it also might not be worth anything. It's like Alan Greenspan said in Congress over a decade ago, we have a system where we can guarantee payments in any amount, but we cannot guarantee the purchasing power of those payments. So yeah, I just wanted to point that out about the FDIC. Don't count on that as real protection because it's not. And I do agree that precious metals, they make a lousy emergency fund. Cash works a lot better for that. And yeah, precious metals are for the medium to long term or the very long term. You could save precious metals ostensibly for thousands of years and pass them down to your distant descendants, and they're still going to maintain their purchasing power. And that kind of makes them unique as assets. There's not very many things you can do that with. You are sacrificing a lot with precious metals, of course. You don't collect interest. They're not as liquid as paper assets and digital assets. You have to store them, of course, or you have to pay somebody to store them for you. And then you got to pay premiums on the physical product. But again, I do think that those drawbacks are far outweighed by the facts that the precious metals are not constantly being devalued, and you don't have to count on the good stewardship of governments and central banks to ensure your wealth. So this video is getting kind of long, folks. That's all I've got for you today. I do appreciate each and every one of you watching. Let me know what you think about the topics I touched on in today's video. Leave a comment down below to let us know what you think, and I will catch you next time. Thank you all very much for watching. Stay safe and happy stacking, everyone. Smart Silver Stacker out.